Hello everyone, welcome to today's daily analysis, October 25th, Tuesday. And let's get into it. So the real fundamental data today was actually very muted. As I said, that this week was quite quiet for the economic release. We did have the IFO business confidence from Germany, which was better than expected. It also has the consumer confidence from US. And then, as mentioned later today in the Asian session, we will have CPI quarter from Australia. That will be the only significant economic release for today. Now, sentimentally, the equity market will all down today, and the WTI actually broke and closed below $50 per barrel for the first time since October 5th. So it's quite a significant down day for the markets to generate a risk-off sentiment day. Now, the important thing today is the comments. Okay, there is one first comment from BOE, Bank of England, and basically, Carney says that this is exactly line. They say that the BOE is not indifferent to the FX rate. So what does that mean is that last meeting in September, they were basically saying that they don't really care about the forex market. So basically they're saying even though the British pound has lost a lot of value, right? It's been hugely, largely shorted, but they don't really care. They don't basically make their monetary policy in line with the currency market. And now today they completely contradict what they said back in September, saying that they are actually taking into consideration of the FX market. Now a little bit deeper to, just for those of you who don't really have fundamental knowledge or understanding of this, is that why is it important for the currency? Well, it's really, good or bad in everything. When you have a low currency, when you have a currency that is cheap, it's helpful for the country's exporter, right? Because when your currency is cheap, then your product becomes more competitive because it becomes cheaper. So when you are competing with other maker in a globalization market, you have a better advantage. But on the other hand, when your money becomes cheap, you also have less buying power. So for domestic people, for people who actually use British pound, that is a Britain, the people, especially the pension fund, the people who are retired, they need the money to buy things. And now if the money becomes so cheap, they actually lose a lot of purchasing power. And also their, money market, their saving become worthless. The saving lose power. So it's just a sword with two edges that you need to consider. So that's why for a central bank, it's always a tough question. They cannot just keep cutting the rate and let the currency drop, because they have to consider, other group of people who are domestic who needs the currencies. So basically, right now they are saying they are taking consideration of the FX market. That means that they do think that right now, the British pound might be too low for them to cut the interest rate or to quantitative ease further. Now, this is a contradict statement from last time. They were saying that they don't really care about the currency value. So last time, basically, the market was expected the BOE to cut rate for the next meeting. Now, today, the comment, of course, now the market has doubt to see whether they are going to cut rate or not. Now, this doubt, of course, become a supported element for British pound. Because now the traders are saying, okay, now we don't know if you are going to cut rate. Now, we were more confident that you are going to cut rate, so that's shorted British pound. But now we are not sure if you're going to cut rate. So that caused the British pound to be well supported, have a better sentiment. Now, the similar comment comes from ECB. Also, the ECB say that they'll prefer not to have to keep the rate at such low level for an excessively long time. That means that the rate is, it's low right now, but they don't want it to be this low for too long. Now, what does that mean? That, of course, they are pretty much not going to ease further or cut rate further. Now, that's a positive sentiment for the euro dollar. So these two comments has given potential, positive sentiment for British pound and euro dollar. On the other hand, there was no further comment from Federal Reserve. So even though the dollar is well supported, it might lose some sense. It might lose some strength just versus these two currencies today. Now, other than that, the other significant news is news from oil market. Now, the API data, the American Petroleum Institute, the data comes out as a large buildup for the inventory. So they were actually expecting 1.7 million barrels, and today they have 4.8 million barrels. So it's a large buildup. Of course, that means you have a lot of supply, which is bad for the oil market. On top of that, we have OPEC member again. As I said before, when it comes to OPEC, you always I don't have too much faith, right? Because we all know that the members had a lot of beef with each other. So of course, they are saying that, hey, let's cut the oil output. It's all gonna be good for everyone. But at the moment of getting that agreement, people start second guessing. People start become selfish. They're like, you know what? I don't want to cut it, right? I want everybody to cut it, but I don't want to cut it, and that's just a human nature. So basically, Iraq came out saying that, or Iran came out saying that they are not. They hope to be exempt from this oil output and things like that. It's just a lot of rumor, a lot of comment, but just understand the fundamental picture is that the members are not in good terms in OPEC. And that's why when you have a certain agreement that might be beneficial for everyone, but it's hard to reach. And that's just the human nature. So that's why the oil market today, you see WTI actually closed down below $50 per barrel, which is very bearish. Now, news from RBNZ from New Zealand saying that they are going to publish expected cash rate in their monetary policy statement from now on. So they used to publish the 90 days T-bill. Now they're going to publish the rate. They've tried to basically stabilize the currency market. So they are basically trying to tell the market what they are going to do in terms of the cash rate. So they don't want too much volatility coming to the, people are shorting or buying the New Zealand dollar. They're basically looking for stabilities. So the next meeting is coming out on November 10th, which is only weeks away, and expected to cut to 1.75. Now, just to note that even though it looks very bearish, right, very dovish for the currency, but understand that 1.75 is still very high. It's still a high yield, the highest yield currency among all major currencies. Of course, what comes next is Australian dollar. So if all things are equal, people will actually like to buy Australian dollar at the moment. Now, today also it's a risk of sentiment day, and the oil market also dropped, but the steel and industrial commodity are actually on rise, and that helped Australian dollar a lot. And other than that, we also have a comment from Bank of Canada, but that was from yesterday. It was basically saying that they are, not going to do anything for the next 18 months. So it's a wait and see mode. They're saying that they have enough flexibility in their fiscal monetary policy already. So basically, it's quite a positive comment for Bank of Canada, because back then people were expecting them to ease further, and they were saying that they might ease further. But now they're saying that we're probably not going to do anything for the next 18 months. So that's until 2018. So providing that, it's well supportive for Canada. But of course, the oil market is bearish today, so that might drag Canadian dollar down. Other than that, we don't have any other significant news. And let's just get into the chart today. So first thing first, let's Euro Aussie trade. Again, as you can tell, we have a range day today, nothing significant. We are still in this trade. This is our stop loss, which is still not touched. We are looking forward to see if they're gonna break down again to 1.4180. If they break down this level, then we're gonna see continuing downfall. I'm happy that Australian dollar is well supported for now, but knowing that CPI data is coming out in next half hour or an hour or so, and that might change the direction of Australian dollar. But nevertheless, it's still a fundamentally strong currency, and as you see that the fundamental factor of the commodities, industrial commodity, which is actually the major player, the major exporter for Australia, are still very well supported. And that's all very good news for Australian dollar. So let's get into our 28 currency pairs. All right, let's take a look at euro. So first, euro pound today. It's quite, ranging bound. As mentioned, they both have a positive sentiment. Euro Swiss, as you see, we actually have a positive sentiment, but then sooner we close below. So, it just still seeing a lot of bearish element in euro. And the euro dollar today, again, it's indecisive movement. Of course, it's a green candle. So saying that, the ECB comment did help the euro dollar, but people still have more faith in the US dollar rather than euro. Euro Aussie, already talked about it. Euro CAD was a large, green candle. Of course, today we do see oil market drop, and that might, play a significant bearish tone for Canadian dollar. Euro New Z is, no significant. It's just a range bound, same as Euro Yen. Take a look, British pound, pound Swiss. Again, we have a neutral ranging day. And let's take a look at cable. I'm really looking forward to see this one. So cable, again, ranging bound. Nothing really significant happened. If you want to say that, we do have a downside movement, but now we close higher. So this is more like a bullish signal. But again, understand that we are still in this range area. And now today's comment from BOE is a positive comment from a British pound. And as I mentioned before, market is looking for any kind of negative comment or negative data to short British pound. As long as we don't see that, we are not going to see a drop in British pound, but we also not going to see a rise in British pound, because there's absolutely no reason to long British pound at this moment, fundamentally speaking. Pound Aussie, of course, another short day, another down day, but nothing too significant, as saying that the market is waiting for a bearish sentiment, a bearish data, but we haven't seen that yet. Swiss franc and Japanese yen, again, we are in a range bound. Dollar, Swiss franc today was a large, up day and a down day. It's very bearish signal for US dollar. So what's going on today? Well, nothing really happening. It's just pure price action for me, because of course dollar is stronger than Swiss franc, but up to a certain point, people are profit taking. This is significant 1.0. That's a significant level for a resistance. So no surprise to see a sort of retreat. Now, back then I would say, oh, right, let's get short this currency pair. But now, no, because I'm completely against the fundamental side of the currency. So I'm not interested in doing anything in this currency pair. It is a bearish signal, but it's not a fundamental bearish pair for me to short. Dollar CAD, same thing. We have a dollar strength CAD weakness today, but nothing significant enough for us to get in. Of course, right now I do think up to this point it's very quite neutral, because now you have a positive comment from Canada. So now we know that the currency is well supported, because there's no further easing for the next 18 months. But we have a negative sentiment in OPEC. And now it's just, these two things hedge out each other. Now tomorrow we have is it tomorrow or Thursday? We have the crude oil inventory. And now, of course, that's going to play a different strength or weakness into the Canadian dollar. But if all things equal, I do still think the US dollar is way much stronger. So today, since the API is a large build-up and OPEC has a negative comment, so if tomorrow we have another large build-up in a crude oil inventory, then dollar CAD will be a good pair to long. But I also want it to go down to a good level. So maybe at to 1.31. Right now it's just too high. So I'm not interested to do anything about it. I'm actually looking forward to it to drop to 1.28, 1.25, 28, 29, this area. But of course we are not going to see that, like I'm looking forward for this trend line. This is actually the only trend line I want to get in, but we're probably not gonna see it because there's no reason to as for now, to see a dollar turn to weakness. Unless, of course, Hillary Clinton does not get elected, then that might be the only thing happening. Or if we have any negative fundamental data coming up for US dollar, that is a huge negative surprise. Then we might be able to see that. Other than that, I just cannot find an entry point for daily trade for now. Dollar yen, again, nothing significant happened. Today you do see a sort of, it's really not significant. It is a bearish candlestick, but it's not significant entry or anything. Aussie Swiss franc, it's an update for Australian dollar, but of course everything might change. Right now it's 7:07 p.m. and the next CPI data is coming out at 8:30. So of course everything might change after an hour of this video. Aussie dollar, again, we are still all in this range position. Aussie CAD, we have an update because we have a bearish signal in the oil market. Aussie Newsy, of course, again, nothing significant in. And now Aussie yen, again, nothing really on my radar. CAD Swiss, CAD yen, and now New Zealand Swiss, New Zealand dollar. I'm basically not looking to do any New Zealand dollar trade just because well, first of all, we don't have any significant drive at this point, and also it's just quite muted for New Zealand dollar at this point, and also the position of all this signal is just not good enough, right? This is all not good enough for me to take any trade. And on top of that, the rate decision is coming out, so I do want to wait after that risk events. So unless I have a good technical entry for me to trade into the events, otherwise it's really not a good timing for me to long New Zealand dollar at this point. And as you can tell, that central bank is really trying to stabilize the market. That they try not to make people to play around with their currency, because right now they're really just looking for stabilities. Excuse me. So yeah, that's pretty much for today. Again, excuse me, nothing really happening in the market, and at this point, really the bad thing for you is just wait and see. Be patient. I know a lot of people have this tendency to they want to trade every day constantly, but really the best strategy when there's nothing is just don't do anything. Because I understand this is not regular business where you make one more phone call, knock one more door, talk to one more customer, you might have one more sale. This is not a numbers game. The more trade you make actually might work against you. And if all things equal, basic reason is because you pay more commission. You have more risk exposure. So understand this is very different than your regular business, or if people come to market from this 9 to 5 mentality, like, if I work 1 more hours, I get 1 more pay. This is completely different game, guys. The more exposure you have in the market, the more risk you have. So this is the right mentality. You always have to think about it. If you are in a financial market where you only have really 50-50% in every single trade, you might have better than 50% in the long run, but in every individual trade, it's like a flip a coin. Tail or head, it is 50-50. Okay, that's a statistic, mathematics speaking. So if that's the case, every time you are in this market, you really have 50% of risk. And on top of that, you have to pay commission. So you're actually playing this when the odds is already against you, especially if you are not using a high, sort of professional brokerage. So if you're using just regular brokerage, you're probably paying $9, commission. And on top of that, you have to basically make money with a higher probability. So if you don't have high probability, then don't trade, because you're really, really working against you. A lot of people trading at the beginning just want to play this kind of 5-minute trade, 10 minutes, 30 minutes. And I always call that just, seeking for actions. They're just looking for excitement. And that's really working against you, because as a trader, you don't want any excitement. You don't want any thrill. Basically, you want things to be very, very boring. Why? Because when you feel boring, that means you're actually thinking with your logic. It means you have a very well-planned trade. There's nothing you want to surprise yourself. So trading should be very stable in your emotions. And then if you want to feel thrill, again, go play bungee jump. go play something else, go have fun outside trading. But when you trade the market, you want it to be very boring. And every day when you realize, I spend more time sitting sideline without trading, you are on your way to become a professional trader, because that's exactly what you want to do. You want to be trading the market like a sniper. Most of the time you are not using any bullet because you are not shooting. But when you shoot, you want to make sure you get the animals. You want to make sure you get the target. So that people who come to the market like a beginner sniper and just keep shooting their bullets, guess what's going to happen? You're going to run off the bullet and you're going to get hit by your opponent. And that's what happened to a beginner trader. They constantly trading until they go bust, right? They go busted. So understand that when there's no trade, and when you can use to it to be able to analyze the market, to be able to do this daily analysis, but without committing your money, you are on your way to learning how to really trade professionally, how to really limit your risk, because risk is always the number one thing on your mind as a professional trader. Okay, so let me know if you have any question. Feel free to comment. Otherwise, I'll see you tomorrow with another daily analysis. Thank you very much. Bye-bye.